Hello, this is Christopher Aaron, and this is the iGold Advisor channel. It is July 11th, 2022, special Monday update because we need to have a gold price update. Gold has been weak here over the last week and a half since we have spoken, and I want to make sure you are aware of the technical levels that we're watching that would still keep gold in a bullish stance here for the next several years. There are very specific levels that trigger either consolidation or breakdowns in our model. So what I'm actually going to show you is a clip, a 15-minute segment of our premium update, the premium member update that went out today. So you're going to have all the latest information on physical gold. And then in the second half of the video, for higher net worth investors, I am going to be explaining about the gold private placement that we now have open. And this opportunity is not available to the general public. Myself and my colleagues, we negotiate these deals with mining companies, and you literally, even if you Googled this, even if you knew the name of the company, you could not find out about this. And so I will be talking about that at the end of this broadcast. Remember, that gets you free warrants. If you think gold is going to go higher at any point over the next 3 or 5 years, this is the time to be accumulating free warrants. You also get a free PMI Plus subscription, and we'll get into that in the second half of this video. So now we will switch over to the premium member update gold price analysis. So let's talk about the price action in gold. Let's call this a quasi long-term perspective this week. Apologies, the very beginning of the dates here, the y-axis got cut off. Remember, this is the peak from 2011, though. September of 2011 at 1920 per ounce, and we're taking it through the present. So the sell-off this week in the gold market right there violated what was shaping up until last week to be an excellent-looking cup and handle pattern. We talked about this last week. The cup here, basically a 9-year cup, 2011 to 2020. The exact peaks of the cup don't have to line up perfectly, but generally speaking, within the same price range here. And then we did see a very nice looking grinding handle, which is textbook perfect. I showed you guys the literal textbook example of a cup and handle pattern last week. So we saw that everything, the cup was looking nice, the handle was looking nice, impulsive breakout looking nice, retests were holding thus far until last week. We saw the failure below 1815 and a bit of a waterfall sell-off into the end of the week. So let's talk about what this means. The most important point for the immediate future is that if you violate the breakout of the handle on a cup and handle pattern, so we're now back into the handle. In other words, we violated this breakout back from February. That negates the cup and handle pattern, and therefore it negates the cup and handle target. And remember, the cup and handle target was this entire amplitude, $1,033, added onto the breakout point of the handle, and that's what gave us that 2,883 target. So when we violate the handle and therefore violate the larger pattern, that violates the target. So we eliminate thinking about 2,883 over the near term, unless gold can recover this figure right here, which will be 1815 in the spot market. And really, there's no, with these types of patterns, there's no 100% rule. But in the vast majority of cases, 2 weekly closes in a row is sufficient to say that a trend support has broken. If you stay below it or above it, respectively speaking, for 2 weeks, in the vast majority of cases, that solidifies the outcome. So last week was the first week as we closed at 1741, but last week was the first week below 1815 for the weekly close. We have to watch very closely what happens. I mean, stranger things have happened than for gold to fall $100 one week and then recover it the next week. So let's give it this one more week, okay? We're going to hope for the best. That said, we are going to evaluate the charts this week as they now appear in the black and white or color version as we have them here, but simply using the raw data. Let's evaluate the chart in front of us, and if we get the recovery of 1815, we'll say it's back to the game on 2,883 immediate target. Let's approach that when we get it, hopefully, but let's evaluate the chart in front of us right now. So below 1815, we negate the higher target in the immediate sense, but I said in the beginning it does not negate the possibility of gold moving higher, including higher up to and beyond that 2,883 level. It's going to have to take a different route to get there. It wouldn't be as impulsive on the way higher, is the expectation. So, below 1815, we have to start looking at what are the next logical support levels here for gold. And in this case, since you're here with me, you're going to be able to see them very plainly, and we can evaluate this together in real time. So the next important support level is right here at 1715. This is plainly visible from the major low in 2018 through the secondary lows, through this low in 2019, and that level continued to rise. I do not change these lines. Even when the market moves away from them, we keep the line where it is, and sometimes we have to wait 2 or 3 years. And here we are getting ready for another test on what will be a 4-year rising trend. And this is going to be fairly significant. More significant, in fact, than this handle support. Even though this would have been the more exciting, impulsive scenario, this support in here is more important for the long run. Why? Because it's a longer trend. The longer the trend, the more important. So 1715 is the blue right here. And then let's talk about basically the last line in the sand for the intermediate term to hold, to still keep any sort of a bullish outlook for the next, let's call it 2 to 3 years. It's going to be 1677. It's the precise lows here. It's the black lows, which also match almost exactly, basically exactly to the dollar with the 38.2% Fibonacci retracement. So you can barely make it out, but there's a dashed line, dashed silver for Fibonacci right below the black line for horizontal. And they're right there. So both of these horizontal support levels come in at 1677. So again, back to the chart. Let's assume that 1815 does not get recovered this week. And let's assume that the price action here over the next 1 to 3 months looks like something like this. Let's say a bit of a recovery back up toward 1800, followed by a little bit further weakness that comes down to test what is now 1715. And let's say a month or two from now, it's more like 1730. And let's say even an intra-week violation of the rising support, but one that is quickly recovered. And so functionally speaking, the 4-year primary blue rising trend holds in this scenario, but the amount of time below the handle pattern is more than 1 or 2 weeks. Let's say in some, remember, we're looking at a 15-year chart here, so the arrows get kind of compressed here. But let's say the total amount of time below the handle formation is more like 2 months or 3 months. So therefore, it's no longer a valid cup and handle, but the rising support functionally holds. What this means is that you can still very well have, generally speaking, the same price scenario here over the next 18 months, where this rising support generally holds, and then maybe it holds again late this year at like 1850 or 1835, and then from there we get the third attempt at these peaks, consolidation, fourth and final attempt. So we can still have a bullish resolution. The way the charts look right now, we can still have that. It's simply that when we break above these levels, using this now more probable bullish scenario, we will not have that 2,883 target. What target will we have? Actually, no target at this point. Once we start to claw our way above these levels, we will be able to do something of a more shorter term target. It'll be the amplitude of this entire cup. It's going to be almost $400 added on to this breakout point. So it's going to take us somewhere into the vicinity of 2,475 as a very early looking indicator for a future target. So it's a lower target based on the violation of the handle, back into the handle, but it could still be generally upward. And this could still coincide with that move in silver from wherever we bottom up to 50. It's just talking about lesser performance in gold than if the cup and handle pattern had held. Okay? The way things stand now, this is how I'm placing the most likely scenario for gold. The way the charts look at this moment in time, with 1815 having been violated, but 1715 still holding the rising support, this is the highest probability scenario. Let's talk about a lesser probability scenario, but one that could play out. We would just need to see a slight change in the technicals here. And that would be, so we follow the red, we follow this first recovery here, let's say back up to 1800, and then we get the brief blip below the rising support here at 1715. But let's say the brief blip below 1715 is not quickly recovered, as in the red scenario. Let's say that the recovery here, now we move to the orange scenario, that it stays below the rising support. So in other words, we do get a failure of this 4-year rising support in blue. And so we start following the orange scenario, which doesn't bottom at 1715, but instead bottoms at 1677. In other words, these lows in here and the 38.2 fib retracement. So let's say we bottom in there. Notice, we're still not talking about gold making a new low. Basically, all this is a second bump against these lows in here. So this wouldn't be any price action that we haven't witnessed already here over the last 18 months. But what it would be is a violation of the rising trend structure here from the 2018 low if we get the orange scenario. And what that would mean is, again, not necessarily any new lower prices in gold, but it would mean that any recovery in gold would have to occur on the lower side of this rising trend. When you break a trend, remember the rule, it means that that former support level should be expected to act as resistance simply on the opposite side. So that if we fail to hold 1715, after the initial consolidation, any recovery should get rejected by that level. And then if we are talking about gold that is still going to advance, it's going to have to advance on the opposite side of this trend into the future. This will be very interesting to see play out because you'll really learn a great lesson if you like to follow these technicals with us. You would see it play out, even though I'm hoping we get the red scenario, which is bullish more quickly. But if we don't, if we get the orange scenario, you will see the former support act as resistance, and then you will see that gold can still work its way higher, and it would still actually maintain the same target of 2,475. It's going to be the same amplitude of a cup, but what would happen is it would push that resolution out further in time. You can see that because by default, it would have to occur on the opposite side of the broken trend. If this is all getting mumbo jumbo, technical, I apologize, but this literally is how the market is going to respect these levels if we get scenario B here in orange. And you will see it happen over the next few years. So, I know it looks like we're just talking about lines on a chart, but it's just incredible, when you see these levels respected. And so if we were to get that scenario where 1677 holds here, we break 1715 and 1677 holds. Again, to summarize, it does not mean prices are going to move any lower than they already have, but it does mean that we are looking at a highest probability, to be realistic, 2025, by the time gold is going to break the peak that was just hit earlier this year on the invasion of Ukraine, and that same peak that was hit in 2020. So it makes it uncomfortable as far as the amount of time that has to pass. We could be talking about another 2 years of gold between 1677 and let's talk about 1850, before it rounds up. So key levels for now, 1815. We will cover that this week. It's anticipating the impulsive move to 2,883. No recovery there, but hold 1715. We could still be looking at the red scenario, just with a lower intermediate target. Failure at 1715, but holding above 1677. We're looking at orange, which means more consolidation necessary. Failure of 1677, and then we start talking about prices coming all the way back down into the zone around 1450. I have no evidence for that at this time. I just want to talk about it ahead of time. We, of course, would approach that bridge when we get there. I think first we have a big test coming up here at 1715. Remember, we could get an intra-week violation or even a one-week violation and then a quick recovery. So let's focus on 1715 and 1815 for the week, and we will approach other support levels if and when we get to that point. And so as we are back in the studio now and you see that there are still pathways by which gold could be moving higher over the years to come, it really appears to be a question of the timing. And if you would like to try to achieve the highest amount of leverage to gold prices, if gold goes to 2,500 per ounce or 30% higher, let's say, that's going to be very nice for bullion, but it's not going to change your life. And so the elite private placements that we are sourcing are the opportunities for life-changing returns. Of course, nothing is guaranteed in the world, but I want you to understand about these private placements. Remember, we negotiate these placements exclusively with mining companies. And because of that, because this placement that I am going to share with you some information about, but this literally has not been announced publicly. You could not go onto the company website, even if you knew the name, to find out about this placement. You could not go onto any public database of private placements and find out about this. You couldn't ask your broker about this. This is how exclusive this is. Myself and my colleagues, we negotiate these deals exclusively for our members to have access to high leverage to the gold price over the years to come. So we cannot announce the name. And I said before, even if you knew the name, you would not be able to Google it because it's literally not even posted on the company's own website yet. So I want to tell you a little bit about this placement. So I do have to cover up the company name and the company logo and the symbols. Some of you may be able to figure out which company this is, and that would be good detective work on your part. But like I said, even if you find out the name of the company, you won't see a news item about this. You won't see that this deal has been announced except through access in our service. So this is a company. Remember, you have to be able to invest a minimum of 10,000. In this case, it's slightly over 10,000 Canadian dollars, which is about 7,000 US, roughly 10,000 Australian dollars, about 6,000 British pounds, in that range. Remember, that's the minimum. And remember, you are getting, in addition to all the shares that you would get in the normal open market purchase if you were buying a gold miner, you are getting a free full warrant for every single share that you buy, which is good at 10 cents. The shares are right now trading at 6. And so you have anything above 10 cents, you have free profit over the years ahead if you think this gold mining company will move higher with the price of gold. Now look at a little bit of the fundamentals here about this company. 2 million ounces of gold in the ground, 2 million gold resource ounces in the inferred category. And remember, the inferred category doesn't mean imaginary. It means they've stuck drills into the ground and have found grades of gold that are worth mining and have published an official 43-101 report, which is approved by the government of Canada. And in order to move from this first category to the next category, measured and indicated, or the last category, proven and probable, they simply have to do more drilling and produce more studies at a higher tightness of the spacing. But this is still 2 million ounces of gold. Look at the market cap, $10.9 million for 2 million ounces of gold. This is located in politically safe Canada. Company headquarters are in Canada. They have other exploration sites in addition to the primary mine. Now look at this. This is the trajectory of the growth of the deposit here after the last several years. The initial discovery was made in 2012, and you can see the number of meters of drilling that this company has done on the gold deposit in Canada. And they released their initial resource estimate in 2019, 1.6 million ounces of gold. The last estimate to come up raised it to 2 million ounces. And depending on what happens here over the next couple of years, there's potential for this resource to grow toward 3 million ounces of gold. They are launching an aggressive new exploration program this year, and there are also negotiations with the neighboring landowners to expand the size of the deposit because some of the deposit extends over onto the neighbors' lands. But even without that, you're at 2 million ounces now. With the in-house exploration, that should be growing to 2.2 or 2.3 million ounces. Potential to expand to 3 million ounces over the next 18 months. You do the math on the existing deposit. Look at this. 2 million ounces of gold divided by a 10.9 million market cap equals $5.45 per ounce of gold in the ground. Are you kidding me? This is in politically safe Canada. This is one of the least expensive gold deposits in the world. You think about historical norms where gold in this category, still on the ground, could be trading at between $25 to $50 when sentiment improves. As we saw in 2011, as we saw in 2020, in those surges, you had gold in these categories trading for $25 to $50 per ounce in the ground. And right now, this is trading at $5.45. You do the math. You are not investing alone. Newmont Gold Company, Newmont Mining, the largest mining company in the world for gold, is the largest shareholder of this company already. So you're not just going wildcat here and sticking drills into the ground. The majority of this company, the largest portion of this company owned by a single entity is already owned by the largest gold mining company in the world, Newmont. Directors own another 9%. All of these government and quasi-government funds own another 34%. So there's only 44% of the company remaining in the float. The majority of this company is held by funds, Newmont, and insiders. So you are certainly not alone. And of course, you look at the chart for this stock. You know we place a primary emphasis on the chart. Once again, I have to block the name because this deal has not been announced publicly. So this is a legal requirement until it is announced publicly. At this point, this is simply a deal that I have negotiated with my colleagues, and we are sharing it with our associates. And when it's announced publicly, it will essentially be closed already. So you will not be able to get access to this outside of what we are doing. This is the chart going back to 2015, and you look at the surge here from 2016, which saw the price of gold rise by about 30%, as you can see in red, and the price of this company rose by 1,450%. This is no joke. This is the type of leverage that these gold mining companies can achieve. You look at this, right? And then you look at the secondary surge in 2020, and yes, it was not the same level as 2016 because sentiment was not quite as depressed as it was in 2016. But still, this company moved higher by 200% as gold moved higher by about 30% in the 2020 surge. Nothing to sneeze at, especially if you had warrants on the deal, which give you about another 100% upside in addition to this. So this is serious leverage when you're talking a 30% increase in the price of gold and 200% or over 1,000% in the last surge. And then you just look at this chart. This is a thing of beauty. Look at where this stock is now. It is back into the same long-term support zone as it was in late 2015 and again in this surge in 2020. Why? For the most part, has there been some share dilution? Of course, but there has also been a material increase of 0 demonstrated ounces of gold in the ground as they had in 2016 to 2 million now, on the verge of moving toward 3 million over the next 18 months. So this is a better company, yes, with some dilution, higher gold prices. The whole key of why it's in this zone and why we would have potential just to get back to the stage 1 base resistance at 330% return is because the sentiment is about the worst that we've seen in the gold mining sector here for the last 6 years. This is the type of move that can happen off of extremely depressed sentiment. So it would be a 333% return just to get back to these stage 1 base peaks here. It would be a 700% return just to get back to the secondary clear resistance here around the 49 to 50 cent level. Remember, we're trading at 6 cents right now on this stock. And it would be a staggering 2,233% return to get back to the former peak. People will say this is impossible, but I have seen this kind of thing happen in previous gold bull markets. Look, it happened in 2016. I have seen moves like this happen off of the 2008 lows that were very depressed. Things like this do happen, and you want to be paying attention to this while we are bumping along the lows. And remember, you will achieve almost 2 times the upside of these figures because you will get the free warrants with this deal via the private placement. The takeaway from our research report: this is a company that is trading at just $5.50 per ounce of gold in the ground. Norms are 25 to 50 for this stage of development for companies. So you can do the math at how undervalued this is, even at today's gold prices, let alone higher gold prices. The company is adjacent to Newmont's producing mine. I am not going to reveal the name of Newmont's mine, again, because this offer is not available publicly. They are on the verge of moving toward a 3 million ounce gold figure. And we look at our targets for the stock, currently trading at 6. We have a 12-month target of 10 cents and a 36-month target, a whopping 48 cents. Massive potential. We're saying this has home run potential when sentiment and valuations revert to their means. Remember, this is a gold mining company that has essentially zero debt. It has a 10.9 million market cap, and that equates to $5.50 per ounce of gold in the ground. Guys, the way to get access to this, as I said, we are exclusively negotiating these deals for our members in elite private placements. Remember, you get free warrants with these deals that get you nearly twice the upside of buying shares in the open market. Remember, this is for higher net worth investors. The key for this is you have to be able to invest at least $10,000 Canadian, and you should have enough to invest in at least 5 to 10 different placements over the course of the next 1 to 2 years so that you properly diversify. So that's kind of the catch. I'm sorry to say, these deals, you do have to have a certain level of minimum. And if you're not at that point right now, it's no problem. But just keep in mind that these deals will be available for you in the future. So I would see it as a goal to get to this point because it really is stacked. If you ask me, the market is stacked in favor of these types of deals. And so I place it as a foremost priority to get to the stage in your investment career where you can capture these warrants and not only have to buy in the open market. Remember, you will get a free Precious Metals Intelligence Plus subscription if you join us in the elite service. And the deadline for this specific deal that I'm talking about, this company, is Wednesday, July 13th. It's this Wednesday. It's 2 days from now. If you register on Wednesday, I can still get you into this deal. Before midnight on Wednesday night, I can still get you in. But I must receive your registration by Wednesday. The next placement will likely be 3 months from now in the fall. And if gold turns by then, we will not be getting access to this level of deals in the fall. So you got to know we are in a window here for this type of strategy. Thank you for watching. I hope you found the update on gold prices themselves useful. This was a snippet of the premium subscriber update that went out today for our Precious Metals Intelligence Plus. And so there is a pathway where gold could stabilize here. The key level is going to be 1715 and then 1677. Those are the key levels that we are watching. And remember, if you want to capture that multi-year leverage, it gets you the possibility where you don't just have to be right on gold prices now, but if we're right at any point within the coming 2 years, you will receive that additional upside for the free warrants, which are good for 2 years from the close of this deal. You've got to get into these private placements if you are capable of doing so. Thank you, and next time I'll be back, we will take an updated look at silver because it is getting very close to that buy target that we've had outstanding of $18.45. Take care of yourself. See you next time.